In this video, we're going to talk about the stimulus package update for July the 30th with two bills that passed the House for the child care tax credit doubling and stabilizing the child care across America. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So there are two bills that passed the House that are going to help the childcare industry across America. And those two bills are the Child Care is Essentials Act, and the second one is the Child Care and Economic Recovery Act. Now, the first one I'm going to pull up on the screen of a brief summary of the Child Care is Essentials Act. And this is going to provide $50 billion for the Child Care Stabilization Fund. And in general, this is something similar to the Paycheck Protection Program or the EIDL grants and the EIDL loans for small businesses. But this is just being geared to the childcare industry. And you can see some of the money or the ways that the money is going to be used. And it's going to be grants to help with the childcare facilities on personnel costs, including the premium pay, employee benefits, and employee salaries, sanitation and cleaning. And you can see it right here with the training, health and safety practices, fixed cost, including mortgage obligations, rent, utilities, and insurance, modifications to childcare services, and other goods and services necessary to maintain or resume operation. So in general, it's very similar to the PPP and the EIDL grant. This is going to do the same for the childcare industry. And the reason this industry is getting support is because in order for people to go back to work, they need to make sure that their kids are taken care of. And this is one of the ways that this can happen. Now, the second bill focuses more on the individuals and the families getting the support that they need to go back to work. Where the facilities are going to get the support from that first bill, this is going to help families and individuals on the second bill. So I'm going to pull it up on the screen and you can see that's the Child Care for Economic Recovery Act. Now, the first provision in here has nothing really to do with getting support for childcare, but it's for the taxpayer services and providing them $5 million. And it's for the VITA program. If you're not familiar with the VITA program, it's right there. It says Volunteer Income Tax Assistance. Now, this is a program that low-income families and individuals can get free tax preparation services to make their lives a little bit easier. And if we scroll down to the first provision that actually has to do with childcare, it's dedicating $850 million to states to help with the necessary expenses for family care for essential workers. Now, I'm not entirely certain how they're going to be directed or allowed to spend this money, but it is going to be for family care for essential workers. And then if we scroll down a little bit further, we can see that $10 billion is going to be set aside for the expenses for infrastructure grants to improve childcare safety. Now, this is more for the expansion side, where that first bill that we looked at is helping the current or existing childcare facilities. This is going to be for the expansion of it. Because what the issue with the childcare industry is you can only watch so many kids per individual, and they're on thin margins. So a lot of these places are going out of business or at maximum capacity. So what they're looking to do is not only help the existing facilities, but also create new facilities to help with the demand. And then if we scroll down a little bit further, it says it may be used for grants for construction, alteration, or renovation of non-federally owned facilities to improve childcare safety. And that's going to be for $10 billion. Now, the next provision is a big one for individuals and families. It's going to make a huge change if this gets signed into law. And it's the refundability enhancement of the Child and Dependent Care Tax Credit. So it's basically doubling it. And we can see some of the changes here. And I'm going to show you what it looks like when we're looking at how it's currently set up. If you're not familiar with the Child and Dependent Care Tax Credit, it's going to change it from 35% and bump it up to 50%. So currently the expenses, if you qualify for the Child Care and Dependent Tax Credit, it's currently only at 35%. So what that means is if you spend $100 on childcare, only 35% or $35 of the $100 can be used for the tax credit. Now, this is going to bump that up to $50 or 50%. And if we look at the second part, it's going to bring the adjusted gross income from $15,000 all the way up to $120,000. So it's going to help a ton of families to pay for their childcare needs. And then even further scrolling down, it's striking the $3,000 limit, which is the max for one child, and bumping that to $6,000. And then it looks like it's going to take that max $6,000 and bump it up to $12,000, or twice the amount. So what it's doing there is it's taking the maximum amount of $6,000. So if you have 2 kids or more, the max credit that you can get right now is $6,000. So because they're taking the one child or dependent and bumping it to $6,000, then they're taking the 2+ kids or dependents and bumping it to $12,000. And it says doubling the amount or twice the amount because it's also accounting, you can see it right below there, accounting for inflation adjustments. So let me go ahead and jump over to the IRS's publication for the child tax credit. And you can see it right here that if your adjusted gross income is at $15,000, you'd be at 35%, but it drops to 20% and it caps out at $43,000 and goes up to no limit for that 20%. But that's going to change drastically if this gets signed into law, where your adjusted gross income could be all the way up to $120,000, and you'll still qualify for not only the 35%, but it would adjust to 50%. And then there's a provision in here for flexibility for dependent care, flexible spending arrangements, and it's the carryover of unused benefits. And it looks like it's going to be the unused benefits from 2020 to 2021. And the reason that's important is because if you had all these benefits through the pandemic, but you weren't employed or you were working from home, then you're going to lose out on those benefits. So they'll use those benefits for 2021. Now, there are a ton of other benefits in here, but I just wanted to highlight those so you can see exactly how it's going to affect your paycheck and getting you back to work and making sure that your kids and your dependents are taken care of. Now, I want to say again, this hasn't been signed into law just yet, so we'll just have to wait and see. But I just wanted to give you a brief update on what is passed the House and what's being proposed. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.